Hello and welcome to Money, Me and COVID-19, where we meet with leaders from the world of business, finance, investing and politics to find out what's really going on during this pandemic and how we can position ourselves to survive in the short term and hopefully to thrive in the long term. My guest today helps businesses to grow both organically and through acquisition. He also helps business owners to retire with the best possible exit from the sale of their business. He's actually really good at helping businesses to double in size in a short space of time, especially if they're in his sweet spot of a £1 to £5 million annual turnover. He's been retained by HSBC Bank for a 2-year speaking tour around business growth strategies, and he's spoken internationally at places like Las Vegas, as well as being the host of the popular podcast, The Business Mastermind. His name is Gavin Preston. Gavin, welcome to Money and Me.
Graham, thank you so much for having me.
Now, one of your areas of expertise is helping distressed businesses, and sadly, I'd imagine at the moment you've probably got more work than you can handle.
Yeah, there's a lot of businesses, quite understandably, are hurting, but there's also businesses that are finishing 2020 pretty flat in terms of revenue compared to 2019, which in its own is better than they feared it might have been. And of course, there are some businesses that are finishing 2020 or on track for a stronger year than they would have expected, and certainly compared to 2019. So there is that mixed bag. And I do help, I advise, I work with businesses, whether it's if they're in that kind of survival mode and they're struggling, I help them get back on track, or for those that are plateauing, help them accelerate the growth again, and particularly give them a focus on what's your 3 or 5 year plan, and if you're really committed to a capital event, a sale and exit over that time period, what are the things that we need to be doing right now to get your business in the best shape for a sale?
Okay, but I mean, being realistic about where we are at the moment, I think one of the challenges facing business owners is do I dig deep and bust a gut to try and somehow survive this phase, or is the right decision that I actually close it down and walk away? I mean, what kind of factors would you look at in helping a business owner to make tough decisions like that?
I've been having those conversations, quite frequently, actually. So we look at the marketplace. So let's take an industry. There's two different businesses, two sort of case studies or examples in the event industry, where we've looked where that industry has been just decimated. One is carrying on, will thrive. There's a future. There's a key major event, sporting event that they work with. They've got guarantee of contract with that. So the main role with that old business was, how do we create a cash buffer in order to be able to survive till that revenue starts coming in again, January 21, March 21. And the answer to that was the Seedles loan. And so the work with their bank and their bank manager was to put the cash flow projections together, the P&L projections together, work with the relationship manager from the bank to be able to get the Seedles loan granted, which provides that buffer. And the knowledge with the forward cash flow projections that if we had, after the 12 months interest free, another 5 years, now of course the potential for extension, then they would be able to weather the storm. A conversation with another business that wasn't a client of mine, but was asking me questions like you've just done, Graham, was they didn't have a future order book. They didn't have any key clients. In fact, there was virtually no business. They furloughed over the staff. He had some retained reserves in his business. He was in his late 50s, and he said, I've had enough. And you add all those together and you go, well, maybe actually you would be better just to close the doors, enjoy the money that you've got, hang back and wait to see what comes next. So my default though is, if a business owner wants to carry on, is there a market? What can you do to secure your cash position? And are you going to be able to develop through CBILS, business bounce back loan, other means? Are you going to be able to weather the storm from a cash flow point of view?
It's interesting because I guess the other side of that same coin is that if you're in a kind of a growth and acquisition mode, there must be some real bargains to be had out there at the moment. I mean, what sort of acquisition opportunities are you seeing people able to take advantage of as a result of the impact of COVID?
Yeah, this is a really interesting space and fascinating space, and more of my time is doing that. So I'm working with one of my clients. I've helped them prepare and achieve a sale. I'm helping another client at the moment to do an acquisition, and then I'm working with other business partners on in a particular sector, looking for acquisition opportunities as well. What you find often with businesses in that SME space is they run their businesses in such a way as it facilitates a lifestyle and isn't necessarily in the best shape in order to maximize their valuation on sale. And sometimes it's an interesting awakening or a realization of a business owner that they're not necessarily in this climate, or rarely in this climate, are they going to walk away with a lump of cash or a check all up front. There's going to be a good amount of deferred consideration, and that's quite enlightening, to put it nice, or a bit of a shock to people. But on the one hand, they may have taken as much money out of their business on the one hand because they've been optimizing their lifestyle and their tax position, but then that doesn't lead from the financials of the business and the EBITDA. It doesn't lead itself to a strong valuation of that business. So that's an interesting kind of educational process, and that comes down to how keen, how motivated is that business owner to sell. And do they believe in the vision that you're portraying with them about what you can do to build on their legacy, to look after their teams, to give a new lease of life and fresh blood into a business to take it to a new sector, a new level, sorry.
Yeah, interesting. So, I mean, one of my recent guests was Jonathan Jay, who's currently building a network of nurseries across the country.
Yeah, I know Jonathan, yeah.
He's paying 10 to 20% of what he was paying back in January for these businesses now. So they're hurting so much, they just want to escape. And he's building up his network of businesses at a much cheaper level than he was even 6 months ago.
You've got a demographic point as well. There's a lot of baby boomers turning 70 that have weathered so many sort of recessions, economic challenging times, and they're looking down the barrel of this one and going, I don't want to do this again. I'm out. I don't want the stress. I don't want the sleepless nights of how am I going to make payroll to be able to pay the mortgages of all the people that work for me. So yeah, Jonathan's doing great in that sector, and he's growing very, very quickly.
So, I mean, you touched there on a point that I often come across with business owners, and that's the kind of succession planning. And should I let my children take this business over and see whether they can take it on to the next level, or am I better off simply selling it and then investing the cash on their behalf? I mean, what's your experience been of this whole passing a business on through the generations dilemma?
Rare these days, very, very rare. If I just look at my dad is not passing his business on to me. It's not because of a lack. It's because we live in different parts of the UK, and it's not a fit. Nor was he prepared to let go of the reins soon enough. And I've got my eldest is 7. He watches these YouTubers, and he thinks he's going to make his millions and have a Lamborghini by making a few YouTube videos. So I think such has been the nature and the change in many professions, and also the changing nature of how we earn money. I think if I look at my 7-year-old, how he will earn money when he's in his 20s, probably some of those roles have not yet been invented yet. And so the chances of succession coming through family, I think are getting less and less. And so that leads a business owner a real challenge around succession. And many haven't thought about it and haven't nurtured the talent. And many haven't had the privilege or got the people that would necessarily in their business be capable of buying them out and taking that business on to the next stage. So a lot of them don't have a really clear pathway to sell, to exit. So
when you come across that kind of scenario, it sounds like it's not an overnight 5-minute job to fix. If I'm a business owner, let's say I'm as I am part of the baby boomer generation, I'm in my 60s, I want to kind of prepare to maximize my exit. what are the sort of steps and what are the sort of time skills we're talking about to get to a point where you think, I'd be getting the best possible price for it?
Okay, so a number of different things. So first of all, we need to look at the financials of your business, and a lot of people will be optimizing their tax position, so they'll be taking as much out as they possibly can through their business, and their profits therefore will be minimized, and that needs to be changed. Over the next 3 years or so, you need to be taking a salary rather than a dividend, and only putting through the minimum that you need to put through for the business. So you go from a position where, quite rightly, you may have been advised the things you can do to minimize your tax position, to go through a position about this is what you need to do to maximize your profit position in order that you have the best possible valuation. You want to be building balance sheet in terms of building assets on the balance sheet, and then you need to be looking at how can that business best operate when you're not a part of it. Some of that's through systems and processes, having those documented and well followed, and some of it's through the team and the succession. So I'm going to be, one of the questions I'll be asking and do ask is, so do you have a middle management layer? Who there is the most capable or has the potential from which to lead? So one organization I'm working with at the moment, I started off 12 months ago working with the two founders. I'm now working with two individuals on the next level down, nurturing their leadership capability, but also nurturing their business savvy capability so that they actually can effectively not only lead the teams, but run it and grow a profitable business. So where you have that potential and that talent, I can help development or point those individuals to where they can get development. Where you don't have that talent, then it's a conversation about recruiting.
Okay, and would you, if you're bringing on that next layer of management there, in order to kind of lock them into the process, would you be looking at giving them some kind of shareholding, some kind of interest in the business?
Yeah, it depends. So some clients, the answer to the simple answer is yes, either through equity or through profit share.
Mm-hmm. Okay. Now, I think the other thing, obviously, we need to bear in mind in 2020 is that there's no kind of MBA or business school program, and to be fair, no living business coach who's been through a global pandemic like this. And people keep using this awful phrase, the new normal. One of the questions I suppose it brings to my mind is, does everything that used to apply to running a business still apply? Or are we in a different world now? And are there new rules for success in business that perhaps haven't even been written yet?
The pace at which we need to innovate is massively increased. We need, Bain & Co. produced a paper around what you need to thrive through this is we need to increase your business's adaptability. And they said there were 3 things that will increase your business's adaptability. Clarity of direction. Where's your North Star? So even though we don't know what's going to happen with lockdowns over the next weeks or months over the winter, say, for example, in the UK, that makes operational day-to-day planning quite challenging. But where's your North Star? What's the ultimate purpose or objective of your business? And you need to keep the teams, yourself, the management team, locked onto that North Star. The second thing is you need flexibility and in your capacity and your cost base. So can you move proportionally more of your fixed costs to variable costs? Can you staff up to the troughs in demand, and then you fulfill the difference between troughs and peaks through outsourcing, through the gig economy, through freelancers, and turn up and turn down your cost base so that you can maintain your profitability? And the third thing, and she's absolutely critical, is that we need a pro-change culture. So whilst we know that the only constant is change, what we really need now is a whole team in our business that want to literally run forward and grab it and say, well, let's listen to our customers, which is massively, massively important. Keep listening to our customers. What are their changing needs? What are their changing demands? How is our market changing? And then iterate, innovate our products or our service offerings to be able to keep up with those and still keep our offering to the market relevant to the changing needs of our customers.
Okay. And one of the things that you've done very effectively is to help businesses to pretty much double in relatively short spaces of time. When you get an assignment like that, what are the kind of key factors that make the difference? Why hadn't the business owners already thought of them? And what do you come along and see that they didn't, that you can actually achieve such rapid growth with?
Fundamental ground level stuff I will do on that is mindset. You mentioned in your introduction to me about the work I did with HSBC. I'm doing that now again in virtual with Zoom webinars. I was on the last 2 Wednesdays and Thursdays and next Thursday again. And like next Thursday's all about mindsets, all about how do we create the difference between game on at the moment in this environment. The difference between game on and game over is mindset. And I'm seeing a lot of individuals in business that have that decision paralysis because they're overwhelmed by the uncertainty and all the different things could change that could go wrong. And yet I'm seeing others that are saying through any period of uncertainty, any period of turbulence and disruption, there's opportunity. And the difference is mindset and your innovation, your ability. I had a great story yesterday, which is just, to me, is a perfect example of the difference in mindset, where a lot of pubs in lockdown the first time obviously had to close up the doors. One local village pub opened the front of their establishment and made it into a greengrocer's, and they served to their local village community fresh fruit and veg. And that pivot, as has become a real jargon phrase at the moment, is a suggestion of mindset. I have to find a way. I can find a way. Let's look what else we can do to serve our marketplace. So the biggest difference that made the difference in my doubling of businesses in 12 months, in changing the growth trajectory, was mindset. So I equipped them with a number of mindset tools to shift their thinking, to elevate their thinking to, this is possible, the art of the possible, and then bolster their belief in them and that of their teams that we can do this. Okay,
and I suppose the other aspect that's really come into focus this year, despite the fact the internet's been around for a quarter of a century, a lot of businesses have realized they have to have a stronger online presence. And if we look at something like a brick and mortar business, you mentioned one just there, what are the kind of ways in which they could look to build a meaningful strategic online presence that perhaps they just simply haven't had for the last 25 years, that can help them to cope with perhaps the reduced footfall and the economic impact on the high street of COVID-19?
Yeah, so it depends on whether your business is operating within a locality, within a local area, and there has been, and increasingly a trend has been seen through COVID and lockdown, of more localization. So people wanting to, because they're not traveling, they're spending more time in the local community, they're wanting to support their local businesses. So there's that's one area where you can reach out if you're trading with a local in a local area. Then video content, put out targeted across Facebook, across Instagram, into your local area can really pay dividends. If it's national or international, what is standing out more and more is you need to communicate based on a clarity of purpose, people wanting to align to businesses with that purpose, back to that North Star thing, but also businesses that are showing empathy and are building trust. And showing empathy, building trust, and also building a sense of community. When we're tribal creatures, we need to connect with people, whether it's in family units, with his friends, within sporting units, business units, whatever. When that's been challenged, and our ability to connect with people like that, those that are able within LinkedIn groups or within Facebook groups to build a sense of community, it builds trust, it demonstrates empathy, it shows direction and purpose, and people feel they belong, and then they can want to go and then engage with them. And I've seen a number of different businesses be very effective in building those online groups on those social media channels, created and engendered that trust, and then being able to convert that into business.
Okay, that's interesting. So coming back to a key area of what you look at in terms of acquisitions, I'd be fascinated to know when you're looking at it, or you're helping a business owner look at a potential acquisition, what are the factors that might make you think, yeah, this could be a perfect fit, like say a Facebook and Instagram, versus a disaster like if we go back to the days of AOL and Time Warner, which I think was probably the biggest corporate merger disaster in history. So what kind of things would you look at that say, yeah, that would be a great acquisition for this business, or no, we really need to walk away from that one?
Yeah, there's a number of things that you need to look at. For example, culture. I'll speak to your point there. You made reference to culture. You know, the biggest reason why a lot of mergers and acquisitions have not realised the efficiencies and the value that they were predicted to have done was because of a mismatch in culture. So, do we believe that you can align the cultures, that you could integrate, that you can be able to create the higher performance that's required out of pulling together one or more culture, two or more cultures? So that's one area. And how do you get the teams of that new business signed up to your vision, engaged, on board, and brought along? And a lot of my background in the early days of my coaching was drawn from the work of NLP, working with Dr. Richard Bandler and Paul McKenna and their business partner in the UK, Michael Breen, and the art, the craft, the science in the world of business to be able to engage, persuade, encourage people to go on a journey with you. It's pretty much second nature for me to be able to do that. So culture and influence and engagement is one part. But then I'm looking for, what capabilities does this business bring? Is it something that's synergistic? So they have a capability that we don't already have in that other business that actually we can bolt on. That means we have either save money in terms of our cost base, our cost to deliver to the market, or we have a wider product range, a more complete service that we can deliver. And so, is it synergistic? Does it give us a geographical reach because we're opening a new location, for example, or does it give us an opportunity to a new customer base for which we can cross-sell our respective products or services? So those are the kind of synergies I'm looking for. And the other thing is that, right from my early days in KPMG, when I qualified as a chartered accountant, from the age of 21, every month I have been in several, maybe not the last 6 months, but every month I've been of that career, I've been in several different businesses that month, whether they be large international corporates or whether they be small SMEs. And I'm very quickly able to identify the levers to pull to change performance. So I just earlier this week spent 3 hours with a potential acquisition opportunity, the business partner of mine. And during the time of making my notes, I've identified half a dozen things that I can do with that business to put a lot more money on the bottom line. And I'm confident from that experience of a 2-hour conversation that we'll be able, that would make a good acquisition. Now, here's the challenge. The biggest challenge, and let's assume the deal is, it's back to that first point around culture and the owners of that business being able to let go of some of the business operational things, or be willing to allow you to, modernize the systems and the tech in that business. Oh, we've not done it like that before. So that then needs a little bit more work, and all the numbers and the strategy might stack up, but I flagged very quickly with my business partner, this could be a potential cultural challenge, and we've got to work out a plan on how we would address that.
Okay, it's fascinating. You talk about the mix of organisations you've worked in, and I've certainly, I've worked in big global multinationals, and I've run my own business where you have an idea in the morning and you implement it in the afternoon. What's been your preference as to which kind of organisation you enjoy working with the most, and why would you say that?
I've always loved having a foot in both camps, because the cross-fertilization of ideas. So the corporates give you scale, they give you vision, they give you, in many cases, best practice how things can be done and scaled and rolled out globally. But they can be slow, they can be bureaucratic, they don't have the entrepreneurialism, and you can come across a lot of blocks from people that are either playing a political agenda or are there just to collect a paycheck, and we're just turning the handle. The other side, when you got SMEs, they're driven, they've got the motivation, the drive, but they don't often know how, in terms of systems to scale, to grow. So I love exposure. I still do work in the corporate space. I still do work, whether it's either coaching in that space or advising strategy or facilitating groups of people to address a point or to improve performance or to, as I say, develop strategy. And I love that, because I bring ideas and cross-fertilize them between both of those segments. So if I was to get off the fence a little bit, because you might challenge me and say, well, that's on the fence. I just love the heartbeat of entrepreneurial, high growth paced businesses with people that care and want to get stuff done. And my decision, I think my work used to be more corporate compared to SME, and it's the other way around now. And the decision to move that shift was I got a little bit tired of putting energy and passion and skills and creativity into people that just couldn't be bothered to do anything with it.
Yeah, and I mean, I think we're at this particular point in history now where we've not only got to come out the other end of COVID, we've also got to deal with a minor point called Brexit that people have forgotten about. To me, my way of thinking is that, a company like, as you say, you're working with HSBC, there's no way on earth they're going to double in the next 12 or 18 months. A lot of these £1 to £5 million businesses that perhaps employ 10, 20, 30, 40 people, they most definitely could double in the next 12 or 18 months. What's your thought on how the government has responded to COVID-19 and how it needs to respond from a business perspective if we're going to enable that growth that the economy is obviously so desperately going to need in the next 18 months?
Yeah, so I think in the response, Rishi Sunak's response to the first lockdown was phenomenal. In terms of quantitative easing, he put the money where it needed to be in the hands of the business owners or the self-employed people or the employees through furlough in order to be able to create that. So that was phenomenal. And I reflect on what's happening right now and the thinking that was I'm guessing was there within the Treasury and Rishi Sunak and his team then was saying, well, let's get people through to the year end. And if I put my hand up, that was my time planning horizon with my clients to the end of the year. I think we're now in a situation where we're looking at 6 more months of this at least until next spring. And I read slightly an alarming headline this morning that was saying that the Treasury are going round to different councils and devolved, bodies to claw back some of the grant money that they had given them before to help local businesses. What, right now? So that's indicative of the fact that the Treasury is desperate for money. They're sending out invoices to say, you still owe us VAT. We know you've got time to pay to VAT, but if you've got the money, can you pay it us now, please? So there's a harsh reality at the moment about, whilst the government support, I think, was fantastic and unprecedented and really quick to respond, the UK government, I have a different view about the Welsh government, but we won't go down that path, who've done a diabolical job around business because they don't understand it. But I think we're in a really interesting time now, and it's a very hard path for anybody in a leadership position now to tread between evaluating and comparing the public health concerns versus the economic concerns versus what they call the behavioural concerns, which is like mental health and suicides and all those sort of things. And the more informed are balancing off those 3 factors of public health, economy and behavioural. Now, that's you could have different parties that are going to argue each. And I have a personal view that maybe isn't that politically acceptable, but there's no vaccine in sight, certainly sometime before we will have enough vaccine immunisation through the population. I think we just need to crack on with life, and it's got riskier. And these rolling lockdowns, whilst it could be a short-term fix, each time it's like death by 1,000 cuts to each business that's been involved. And I think most businesses would, not everybody weathered the first lockdown, but I know another 6 months of this, it's going to be decimation, and it's very concerning. And so there's another point I wanted to build on that. Now is a time required for leadership. The Chinese symbol for crisis is danger, and John F. Kennedy said it was change, the second part, but it's actually change. So it was danger and opportunity. It's actually danger and change point. Now is that Chinese symbol, danger and change point, is the symbol for crisis. It is a point of change. And I'll often ask the people that I work with, when they're setting themselves goals for the future for their business, somebody of your skill, your passion, your experience, your creativity, your resources, your resolve, is that goal worthy of you? Well, right now, in the current market space, we are being presented with challenges that, boy, oh boy, are worthy of us. And I think now we're seeing people really being stretched to the limit of their capability, whether that be in business, whether that be in politics. And you'll see new leaders that will need to step up and lead. And I think now is a real time, an opportunity for us to collaborate together, to step forward within the world of business, innovation, determination, and resilience, but innovation in our product offering, and be able to say, rally the troops, we can do this. It's going to be a bumpy ride, but we can do this. And if we keep our eye on our marketplace and we keep focusing on the difference that we make with the delivery of our product or service, we can get through this.
Okay, well, I absolutely endorse your demand and request for leadership. I think there's a huge leadership vacuum politically at the moment in the Western world. Anyone that watched the first US presidential debate might think, hold on, 300 million people, and those are the best two you can find. Yeah. But I think I also agree that we've got to get on with life. I definitely think it's a time now to say, okay, if you're vulnerable, you have to hide away, but otherwise you have to get on with life. Otherwise, the whole world's going to collapse. So I totally agree with you on that. All of that leads me to what's probably my final and $64,000 question for you, Gavin, which is, if you were to start a brand new business from scratch today in this COVID-19 world, what would it be and why?
That is a really great question. That is definitely the $64,000 question. I think it would be, you'd have to have these. I'm thinking aloud, okay? So this is how I think by talking aloud. So I would look for scalability. I would look for demand in the marketplace. These are all basic considerations. I'd look for how quickly you could cash flow it. But what I think people need most at the moment is hope. And I think they need to be able to engage and relate with each other better. So some kind of, starting right now, I think the option is if you could do the manufacture of tests, or I've got friends who've done face masks and responding very quickly to that, and then that would be great. But I'd be wanting to help people to, how can we pull together to come up with creative solutions to these problems? And I think one of the best definitions of entrepreneurship is, creative people addressing meaningful problems in the world. And so I'd be wanting to pull together a group of people that would address the right minds to pull together what's a particular problem that we can do in business or in this particular community or society, and how can we, across different ideas and sectors, how can we pull together a group to create a solution, then raise the funding off the back of that, and that solution would need to be scalable, have a market that had the demand, etc. But I'd be collaborating. I'd start from the position of what's the problem and how can I bring a multidisciplinary team together from different walks of life to get that cross-fertilization of ideas, and then go and get the funding off to be able to bring that to reality.
Okay, and I think the question often that people ask is, should I start some brand new business? But I suspect from your own experience, the quickest way to the money, if you like, is actually to take an existing business that has proven all the things you just talked about, and then really kind of turbocharge it with growth, with management, with extra capital if needed, to actually build something that's already there rather than start from scratch. Is that
Graham? I completely agree with you. Yeah, I'm completely agree with you, aligned with your thinking of Jonathan Jay and others on this, that you're better to actually take a business that's already got a proven marketplace, got a trusted customer base, and be able to make the improvements internally within that business to be able to scale and grow and create synergies by bringing more of those businesses together rather than doing a startup. It's hard now to do a startup, and it's a lot harder to be able to raise funds for that. There's a practical thing. You can raise funds off the back of an existing business through CBILS or business bounce back loan. You can't raise that funding on a startup.
That's great. Great point on which to end there. Gavin Preston, thanks very much for joining us.
Thank you for having me.